Good morning, good morning, good morning, good afternoon, good evening, whatever time of the day you're watching. It is Labor Day weekend, 3-day weekend. Markets are closed today, so late video update. And I tell you, I got some sniffles. This is a typhoon that was due to hit Hong Kong and wound up veering over to Taipei. It was signal number 10. That's as big as you get. But man, it is sucking so much weather across me. I have not seen the sun since Thursday, and the rain is unstoppable. So I got caught out in the rain 2 days ago, and I'm paying for it now. So anyway, here we go. SPX, we'll start here. Called that bottom pretty nicely, didn't we? Over here on August 18th, when we went down to 43.35.31, we nailed the 23.6 retracement to the 2022 lows. Same on SPY, same on QQQ, as well as that fake print. Incredible. Boom. Get out of there. Looking for that bounce. Also had 3 red weeks. Very clearly looking for that bounce. Well, this bounce that we've gotten has been pretty well orchestrated. Gap ups every single day last week. Green close, red close, green close, red close, green close. Now, this week, essentially, we gapped up every day. That one day on Tuesday, we had a less than 1 point gap down, and then they threw that algo, monkey wrench out there. Granted, like I said, we were long, looking for going to the upside, starting out on, further dated stuff, but that 68-point day was the entire week. Huge move right off the open, no gap. Had that fractional little gap down, bang. And on this move up, we have filled all of these gaps. There are no gaps to be filled. All the gaps have been filled. And we ended there on Friday with a almost 40-point range, another green Friday close. I need to mark that over here. Excuse me. And we ended the week with a green week, 45.41. Now, for now, because we are heading into the very first session after the holiday, and more importantly, our full moon was on August 30th. So we have one session, 2 sessions. I prefer to leave a window open for tomorrow, for Tuesday, that they possibly could go up there and go fill that gap that we have unfilled from all the way back on August 2nd, which is here at 45.51 and 45.77. Whether they fill the gap, touch the bottom of the gap, you got big problems over there with 45.45, which I'll show you. Your September of 2021 high before we sold down 9% for the month. But what we are working with from a stat point of view, range is back into a more normal area, 37 points. We have obviously been on a tear of gapping up on this move, which 45.41, 43.35, don't have to be a mathematician to see, fractionally greater than a 200-point move over these past 2 weeks to the upside on this bounce. So the bounce retracements using this 45.41 for now. Again, very easy to calculate. Calculations right there. You take your high minus your low, as you'll see here. Your high minus your low, multiply it by 236, and then subtract your high. And that's where your retracement is. 44.92.65. That is the first. Didn't come down to it there on Friday, but that would be the first A, retracement, B, signal that we do have what virtually everybody on the entire FinTwit is all looking at, which is the same thing I've shared during the course of last week and for the projection of getting into those September, October QQQ puts. Everybody is looking for the downside. And I tell you, if you haven't had a chance yet, please, I ripped this so that I could make sure that it could be shared because I could not find it. This is due diligence on Nvidia, and it will blow your mind. Back when I ran, where was it here? When I used to run AIM High Profits, converted penny stock traders into what we have today, which is trading options, because penny stocks went to complete shit. 2012, 2011, 2013, they were amazing. You can go out there and look. I'm the one telling people to buy Celsius at 37 cents. It's trading at $200 today. Granted, it's 11 years. It's a 57,000% return over 11 years. So uh, I do highly recommend that you take the time, go over there, watch this video on Nvidia, and I finally have the credibility behind what I've been saying for months, which is Nvidia is a Ponzi scheme.
What's up, boss? You believe that? You hold on. Oh no. Do you believe in that?
So enough on the SPX on the data here. Again, going into a fresh week, first week of September, very little data at all. A lot of Fed speakers, very little data. We've got some PMI coming out over here on the 6th, on the 7th, same old thing, where we get the jobless claims. A lot of speakers on Thursday. A lot of speakers on Thursday. A lot of Japan news as well. And then Friday is virtually silent. So indexes, again, indexes roll over on September 11th. So as we are heading into quadruple witching options expiration, which is the week of September 15th, with all of those big events that are going to be happening that week, a lot of money is on the table over these next 2 weeks. Bring you over here onto the SPX. And again, full moon is there. This would be the third session that we're coming into here on Tuesday. So for me, I would be extremely confident if I see us break down below 44.93. That's me because I'm the full moon guy. But it comes with a step. Want to see 44.93. After 44.93, I want to see 44.58. And that's where your 50-day moving average is as well, which we'll go over. So again, just to draw back, 44.92.65, 44.62.58. These are the preliminary retracements, 23.6 and a 38.2. So nothing to be extremely aggressive about as we begin this week. More of a, okay, come on and show me what you're going to do approach. And then we go from there. Over on the QQQ, similar thing. Since August 18th, wasn't the bottom. Actually, yeah, it was the bottom, 354.71. Last week, Thursday, we had the most epic of epic trading sessions in well over a year. Since the fucking October lows. The biggest trading range of the year on the QQQ. A 3.5 point gap up, an 11.7 range. And we were down 2.19% from the previous close. From the highs of the day, it was greater than a 3% move on one day. Anyway, August 18th, options expiration. And since then, we have virtually gapped up every single day. This one here on Friday, big tell sign here. Got your gap up right up there to 380, right inside that unfilled gap from August 2, and you closed red. No bueno. No bueno, Mr. QQQ. No plus 1%, no minus 1% for the day. But again, calculations here for the dip preliminary is 374.67. After 374.67, we want to see them break down to 370.85. break into the 360s and that 368, that big 368, and we can start clapping and celebrating that we are in the position that everybody on FinTwit is projecting. Big guys, medium guys. One guy is out there that I know of who is out there talking about, hey, but in years where January, the NASDAQ is up more than 5%, September has tended to be bullish 8 out of the 12 times. One guy, and he goes all the way back to 1904 with all of his data. So one guy, everybody else, and I can't believe it, but everybody else is seeing the exact same thing. So I'll just bring you here into a very wide view of the SPX, right? And again, we dropped 1,327 points last year. We've just rallied 1,115 points into the highs there in July, August 1, whatever. We had a 336 dip, a 387 dip, and all we dipped was 271 points so far in that August move. A little bit better than 5%, but that's about all that we moved. What I'm showing here in the green is the 100-day moving average. And not that it is as significant, but I want to just bring it to the attention as to where it is, which is basically right onto the lows that we placed 2 weeks ago. It's all the way up there at 43.33 right now and climbing. But you see back here over in March how we broke down below the 100-day moving average after we broke the 50-day moving average, after we reclaimed the 50-day moving average. Right over here, we broke down below it off of that February drop. Then we reclaimed it, and we were up here for a couple of days, and then we slammed back through it, and we broke the 100-day moving average, and that was the bottom. This is a very zoomed in example, but it would be a fulfilling video game premonition, whatever fucking word it is that I can't come up with right now. I'm having a Mitch McConnell moment. That we dip this, break that 50 quickly, break down below the 100-day moving average, everybody starts to get bearish, and then it's, hey guys, guess what? The dip's done. That's all we were going to get. So that's the view that we're looking at on that. I'll bring you here into a little bit more of a detailed view so that you see what we're talking about coming off the October lows. You got a nice 1-2, and we came right to it right there, that 43.73, which is when I started talking about I'm a little bit worried that we have all of the bounce, that the bounce is over. It's done. It's finished. Look over here on our other notification, looking at our 1-2 coming off of October into December, into that December low, and we came right up to the 200 extension, 45.38. Broke right above it. That's where we're at right now, 45.41. Nice, clean 1, 2, 3, 4, 5 after an AB and an AB. So it looks very clean that this is a completed bearish move to the upside, which is a little bit of a concern from a wider point of view. From what we're in right now, doesn't make a difference. What we're looking at here, having come up here and done what we did, this is a nice ABC down and a nice ABC up, and what we should be produced is 5 waves to the downside. A tiny little 1, a tiny little 2, and then a big 3. And then we get our little 4 and little 5, and it's over. And the projection still stands to where it stood going back well over a month ago when we talked about breaking down below that 45.50. 42.69 fits the best, and it would still continue to be bullish. If we break down and we only get down into this 42.69, 42.35 area where there's a little bit of a gap, perfectly fine. Now we start breaking down below the 4200s, and I start to get worried. I start to get concerned over the bigger, wider view, and I start seeing this as a much bigger, much longer move that we are looking for towards the downside. Doesn't matter for now because we're not trading any of that. What we're trading right now is we're trading what's in front of us. What's in front of us is what I was explaining there during the course of the week, how the 4-hour had gotten overbought. That's enough of an indicator in and of itself to start suggesting, okay, you've gotten your bounce. Now it's time for the dip, and let's see where this dip takes us. So from a cleaned point of view on the SPX, very simple. We are looking for the 5-day moving average. Get the 5-day moving average, and the 50-day moving average is not going to be moving up incrementally like the 5 and the 10 and the 20. 50-day moving average is going to be hanging out there at 44.70, 44.72, 44.74, roughly moving up about 2 points every day. So not much to go out there and start getting extreme about. But what you do get when you have those big moves to the downside is because you got all of these shorter time frame moving averages that are all extended and jumbled and flip-flopped upside down, is after you start to crawl sideways for just a few days, they all start to come back together and they start to compress back together. What you see here, you see the 10-day and the 20-day right here at 44.48. And these will slowly start to increase and start moving upward to be on their 10-day moving averages. And then your 5-day starts to slowly move down, and it becomes that much easier to get a gap down so that you can break through them because, as I've taught you guys, trading that 5-day moving average intraday when you were on the 0 DTEs, how much fucking money did we make off of that during the course of that August drop? It was it was like taking candy from a baby while driving a van and not having a license and a flat tire. This is the problem. For credit spreads, this is a problem. The VIX, and yes, on Friday, the VIX got slammed. They compressed the VIX, and even though you couldn't sell it down anymore, they still sold off the VIX. It is a tradition that we're continuing to see for weeks and weeks and weeks and weeks. So, being that we do have a compressed VIX down here in the mid to low 13s, it is going to continue to be very, very difficult to be able to get into a safe credit spread over on the SPX, on the 0 DTEs. Like you saw over there on Friday, it's just me because of the charts. That's what it is. The 45.50, 45.45s, bang, you pop 250 for a couple of minutes. $1.75, $1.85 was there for 30 minutes, 45 minutes. But you've got to get close to that price action if you want to get paid on these credit spreads. And a lot of you have been around for a long time, and you see, we do get paid. But every time when we're going that close to the action, we will get hit in the face. So sizing, very important. Very important. Like I said last week, don't oversize. But at the same time, when you are going into it, if you look at it as, okay, if this doesn't work out, then I'm prepared to do this. Either take the loss or roll it and widen it, collect a little bit more credit, and go out a couple more days, which a lot of you have already messaged me on the ones from last week when the algorithm hit because you were overexposed. We've got a little bit of a gap over here on the VIX, so that is, I mean, that's fucking obvious. They're going to fill the fucking gap. They're going to fill the gap. And they're going to bring it back down here to the low 13s. They're going to fill this gap. Just assume it's going to be taking place. And by filling that gap, that means your SPX can take a fractional little step higher to the upside. But again, we're playing with fire down here. 1273. These are your lows from June. We're at 1309. We're almost on not only 52 week. Here's the 5-year. 11.03 prior to COVID. Come over here and just look at prior to COVID. We came down to 1136 once, but we were coming down here to 1189, 1255, breaking it. So there is quite a bit of opportunity, again, opportunity, that we could wind up seeing the VIX get crushed even further, which gives the bulls nothing but a clean ride, and the entire dip of August is finished, complete, over, done. We're looking at 4700s. On the NDX, the NASDAQ, again, big overbought on our wider 4-hour time frame, which is, again, a strong suggestion to the move is complete, and now it's time to start seeing a little bit of a dip and see what it proves. Very clean ABC. And from here, looking at it as an A and a B, having had an ABC to the upside, we should, again, be seeing a 1, 2, 3, 4, 5 to the downside, whereas 14,245 would be a break of the 100-day moving average, a perfect C equals A. Doesn't need to happen like that, but at least we would be able to come down to the 23.6 retracement to the COVID lows down here at 14,400. Bigger drop, perfect. Let's do it. If we can get down there to that 13,395, we would be coming into contact with the 2016 lows trend line. Not that it's significant, but when you start to zoom yourself out, and this is a trend line that we're talking about, which is coming from 2016, Brexit and the elections on the lows. This is your 2018, your February and April lows, and this is your big trend line, which is your COVID lows and your October 2022 lows. So we're up above all of those lows. So everything is hunky-dory, fantastic. How we move during this week, especially in the first few days of the week, will start to give us a little bit more confidence as we're heading into the big week, which is September 15th. So here's your QQQ. This is the gap that we're talking about that can be filled. All right. Came up into it. It used to be 380. Now it's 380.86 because of what happened there on Friday. But it fills all the way up just around 383. You have a fractional little gap over here from back in July. But here's your big gap. Your big gap here being what it is. And again, from the looks of it, a clean 1, 2, 3, perfect little ABC, 7.36% rally. Put it into context. This was a 13-point rally. This was a 9.5-point rally, 13% rally, 20% rally off of the January lows. We've just moved 7.36%. Less than a week, really, because of the big move that we had down there on Thursday. So, big, wider picture, there is plenty of opportunity. But the first thing that we need to see is that move down below 374.67. 375.27 is your big Fibonacci. And right there is your 5-day moving average. So short term, that is the only thing in view to the downside. Short term on the upside, 380, that's it. 380, 381. You saw that sell-off there on Friday. It took that and said, you know what? Fuck you. No way I'm doing this. And it said straight off the bat. So another one of those things that gave you a little bit of confidence to think, okay, yeah, this top could be very well producing. So now I leave you with the oh fuck SPY. Our move down again, ABC. Our bounce up again, ABC. Gap to be filled over here. Same thing over there on SPX. 45.50, 45.77. That's your gap from August 2. Right here, 453.50, 456.50. But then you got this. You got this fake print, which came out on August 6th.
Not this time. Not this fucking time. No! No, 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 no! No! No, 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 no! No! Not this fucking time! No fucking way, no fucking way! No fucking way, no fucking way! You made me look a right cunt!
So, yes, it is, without a shadow of a doubt, something you got to sit back there and go, but what if? So, you've got this here, and you come around and you say, well, fake print. What the hell's a fake print? Yeah, you get them every now and then. You see? You got one over here back on July 25th. Went to 355.92. Where's our lows? Right there. So, again, I've been duped by fake prints before that didn't work out. I am not trying to scream fire in a fucking gasoline station. But this is something that you need to be absolutely aware of, considering the fact that we are nice big sell down there, nice big bounce so far. If we only dip and we don't start breaking down below that 50-day moving average, I will be forced to start looking at that 460 and a little tiny gap up above there all the way up to 465. I won't have a choice. If we cannot break down below the 50-day moving average, break down below last week's high, no choice. Got to do it. So we are in a sit and see, sit and watch, and that's your spot right there. From 2 weeks back, what was this, 45.27? This is the highs from last week right here. 44.90. Am I right? I like my regular chart. Give me my chart. Yeah, right here. Looking back at last week. Nope, that's the week before. This is your highs. Fuck me, man. I'm going blind. This here is what I need to see get broken down below. 44.58. 44.58, right underneath your 50-day moving average. 20 and 10 are going to be moving up slowly. That's the first one I need to see broken. I see that broken. I have confidence that we are going to be heading down to the 4200s. So I leave you with that. And yeah, again, have a wonderful, wonderful, wonderful weekend, or well, Monday, day off if you are. Go drink some beers. Go Deion Sanders. That was some epic football. Apple gap almost filled. Call it filled. Actually, this doesn't need to be there anymore. Time axis, price axis. Oh, yeah, it is. Almost filled over here on the gap over on Apple. Google, huge, huge move up there to 137. Top for me. 135 is now your support, but your big support's down here at 130. Tesla, ping pong. Great play on the calls. Dropped right down to 242 perfectly. 259, 242, ping pong. Amazon, yeah, got a little bit ahead of itself over there with that Shopify deal. Nvidia, scam, scam, scam. Meta, fuck you. Back up in 300s. Microsoft, chilling, doing nothing, right at 330. AMD got a lot more juice than Nvidia, maybe as if they're pulling out of the scam and going into something which is less of a scam, but a shittier company. So not much really to go over other than I'll see you guys in the chat room come Tuesday.